Hey traders, and welcome back to some market insights with Richard, serving traders responsibly here with Orbex. Hope you enjoyed the weekend, hope you recharged your batteries and you digested the Friday's NFP webinar, let's say, and the recording. By the way, the recording should be in the description. If not, you will actually find it in on the Orbex blog. So today is obviously Monday. It is the 4th of February 2019, 10:28 a.m. Eastern European Standard Time, and I'm gonna kick this week off with the indices. Today is Indices Day, so just quickly going on the economic calendar. Right here, we have some news expected for the euro. Let's say, for instance, the Spanish unemployment rate has already been released. It is, let's say, for instance, less than forecast by 27.532K, and the next expectations, let's say the most important, let's say for the day, it is, let's say, a light day. It is Monday. However, the markets are they are located at a juncture. So if you were inside the actual room during the NFP Friday's NFP webinar live session there, then you know what I'm talking about, because I've been expanding over this during the webinar. But let's just continue. So we have basically important data, the PPI for euro and the factory orders, and for the pound we do have the construction PMI. Okay, so it's not going to be such a busy day. However, just going to go on the indices quickly, because let's say, for instance, the factory orders could actually affect the US indices, and let's say the Euro PPI could actually affect DAX. So let's just jump on DAX first index right here on the daily time frame. And the way I'm actually labeling this structure is in a complex triple free in a larger degree correction. So by the way, it's actually sliding right here. Okay, I'm actually labeling this in a potential running flat. As you can see, this descending channel has been posing as a resistance, let's say, and it could actually provide one more. And the way I'm seeing the rising structure is in a potential ending diagonal in a C leg, thus possibly ending a structure. So regardless if this is a wave 1 and then this could be a wave 2, a retracement should actually occur around here, and it's how this retracement would actually look that will tell more. If it's a zigzag as a corrective structure, then it could be breaching this channel and basically break out of this bearish sentiment. However, let's just take a closer look at the 2-hour time frame on DAX right here. And this structure, the rising structure, the way I'm labeling it is in an A, B, and then a leading diagonal in one minute green, and then retracement in wave 2 running flat right there, and let's say, for instance, a third wave, and then a complex structure prolonged sideways move on wave 4. And I would be expecting, let's say, for instance, a possibility for one more move up, and this kind of correlates with the Dow Jones, S&P, and NASDAQ following basically the global indices. So let's just jump on the Dow Jones dollar, let's say the daily time frame, and the way I'm structuring this is in a complex, let's say, complete structure, but it could be a complex thing, because this X wave could actually finalize here, and the only way the Dow Jones could actually prove this, that the bull market is actually returning, would be a breakout over this and then gaining support. However, if we do look at the smaller time frame, let's say on the 4-hour time frame on the Dow Jones, I cannot stop noticing this possibility for an ending diagonal in this C, which could be quite dangerous, right? Let's say, for instance, the way I'm labeling the rise is in an A, B, and then 1, 2, 3, 4, and then 5 for a possibility of the C leg ending. So basically an ABC basically ending a possible structure. So this could be the X wave, all right? And this means that the Dow Jones could be poised for more downside, and that the bear market has just started. However, okay, if this is indeed a wave 1, a start of something else, and then a corrective structure would actually look like that. Now, if a zigzag would occur or a simple type of a move on the downside, a simple correction, then I could be looking for the upside. However, if I don't have that yet, I cannot make up my mind yet and make the final decision in regards to the indices, right? The reason why I'm saying that is because all of them, they look alike, and a downfall right here could actually mean a breach, okay? And this could be poised for more downside. So we'll see. Let's say, for instance, the S&P 500 on the 4-hour chart. So SPX right here, A, B, 1, 2, a leading diagonal, small correction, then 3, 4. This could actually be a triangle as well, no doubt about it. And we're noticing the possibility of a bearish divergence on all of them, on Dow Jones, S&P 500, right? So this could shoot for one more last move as a possibility. Not saying this will happen, but it could. So you guys need to keep an eye out for that move on the upside, basically confirming the ending diagonal and the bearish divergence, and could actually start retracing. And according to how this retracement will look, then we'll have more details if the moves could be prolonged for the downside or limited. And this obviously can be they could be measured once it actually starts, right with a 61.8, 50% right about there. Okay, so let's say, for instance, somewhere around the 25 say 2,530, 2,475, something like that on the S&P, okay? Now, NASDAQ has a very rare structure in the C leg right there, in a possible expanding ending diagonal in this 1, 2, 3, 4, and then the ABC of that 5. So this could put the NASDAQ in a possibility for one more squeeze, and then we'll see what this would be all about. And the reason why I'm saying all these for the indices is because the VIX on the 2-hour time frame, as you guys can see, it rose one time, corrected, then rose another time. So this could be a complete structure, right? However, if this is destined to go lower towards, let's say, returning towards the complacency periods, then it could form at least a correction, right, and possibly bump its head and retest this channel, right, because it's obviously it's been broken right there. So it could be returning for a retest, and this could pave the way for more, let's say, at least a retracement for global indices, right? So that's about it. That's what I wanted to say for today. As always, until next time, stay in the green and many pips ahead.